Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week, and we are starting off from the dollar index. This is the weekly time frame. So you guys know I've been making reference to this weekly bullish fair value gap in which we saw how price returned into that zone, and then we had bullish rejection in which I told us to expect bullishness into the consequent encroachment of this weekly bearish order block before we could determine the possibility of a bearishness, or we could see further bullishness to the upside. So last week I pointed to the fact that I'm more of expecting to see that price may aim higher to take out this equal high points, which is buy side liquidity pool resting here. But then also when we drop to the lower time frame, I gave us a scenario where we could now anticipate the possibility of a bearish movement. What we need to look out for that would actually frame the bullish possibility, and what also we would need to look out for to look at the possibility of bearishness to the downside. And what we can clearly see is that last week gave us bearish delivery to the downside. I didn't give us just a specific price direction. I didn't give us just a specific directional forecast. I gave us two directions because first, price was reacting at a weekly bearish order block, and also then we had the fact that now this is a bullish zone that sponsored this bullish movements. So we could either see price may aim higher because of this equal highs, or now price may really respect the weekly bearish order block, and then we have the bearish movements. So now what we can see is the fact that we had a bearish movement of price to the downside. Price traded into this down close candle before the bullish movement to the upside, and also into the weekly bullish fair value gap. And currently, what you can see is the fact that volume closed above the consequent encroachment of the weekly bullish fair value gap. So for the dollar index, we really need to be flexible and open-minded to what may happen in the market, because right now in the bullish side, we have this equal high resting here. But what we can see is that the dollar index has been bearish. You can just see we have bearish volume to the downside, and clearly now we see that price reacted from a bullish fair value gap zone and sponsored this bullish movement, and now we had the bearish movement back to the bullish fair value gap, and volume closed above the consequent encroachment of the bullish fair value gap zone. So to the upside, what we have is this equal highs, and based on the bias we are now bearish. So we just have to look at the lower time frame to not look at the possibility of either expecting bullish movement to aim for the equal highs, or we could see bearishness to the downside. And if we are bearish, we want to be bearish to the downside to this key level we have here, which is the close price of the bearish candle and the open price of the bullish candle. And then to the upside, we want to see price take out this buy side in extension, this buy side, and then aim for the equal high points. So let's look at the daily time frame. In the daily time frame, what we can clearly see is that we have the bearish structure, which in the weekly time frame we saw the bearish delivery of price, the impulsive candles bearish to the downside. So we identified the weekly bullish fair value gap zone in which price reacted into and sponsored this bullish movement. So price did not take out this high point to really give us a reason to want to say we are now possibly strongly bullish to the upside. Price traded back into this bearish order block, this supply zone, and we can see price respected that and gave bearish movement to the downside into this daily bullish fair value gap, which also is in confluence to the weekly bullish fair value gap. So in the dollar index here in the daily time frame, what we can see is the fact that price respected the supply zone and we had the fall of price to the downside. So what we can clearly see is pool of buy side liquidity is resting here. Price reacted from the bullish zone here, which is the weekly bullish fair value gap, and gave the bullish movement of price to the upside. But then what we can see is that price failed to continue bullish to take out this high point, and now bearish respecting the downward trend. So what we can see is we have this daily bearish fair value gap. So if you're bearish, then your expectation would be to see how price is going to trade to the upside and how price is going to react at this zone, and how we can see volume trade back below the daily bearish fair value gap. And then we want to be bearish down to this level first before we can start determining the possibility that price may continue bearish more to the downside. So if we are bullish based on the daily time frame here, want to see strong volume trade above, and volume should actually close above the very close price of this bullish candle and also this bullish candle, and then we want to see how price may retrace, and then we have bullish continuation. So you can see from the daily time frame, you might actually miss the bullish expectation if you're strongly trying to look at bullish narrative to the upside. So now we have to now look at the lower time frame next, which is now going to be our 4-hour time frame. So in the 4-hour time frame, what we can clearly see is that we have this delivery to the downside, which we identified from the daily, the supply zone that price respected and gave us the bearish movements. So what we can see is we know price returned to the daily bullish fair value gap, which is in confluence to the weekly bullish fair value gap, and we're seeing this bullish movement of price to the upside. Clearly what you can see is that price respected this open close price. So yeah, so this is a key level that price respected, and clearly we can see this is actually the impulsive movements that took out this opposing supply zone, this bearish order block, and price returned to it, reacted to it, and then we have the push of price to the upside. So from the 4-hour time frame, we can see that price is respecting this bearish order block, and now we had this rejection to the downside. So if we are bearish on the safer side, you would want to wait to see how price is going to violate this bullish order block, and then we want to see that reclaim price and then send price lower to the downside. So you want to trade lower to the key level we identify from the weekly time frame before we now expect more bearishness, the possibility of more bearishness to the downside. So this is what you'll be looking forward to see if price violates this bullish order block. So want to see if volume would trade below that, and then want to expect the pullback for us to have bearish continuation. So the sell side here is our target. And then if we want to see bullish movement to the upside, then strongly you want to see how price doesn't violate this in a lower time frame, your 15 minutes, your 5 minutes time frame. So you want to see price respect this bullish zone, and then we have price trade first to this daily bearish fair value gap, and if price violates this to the upside, this would act as an inversion, and then you want to target this liquidity resting here because we also have this liquidity gap, and then want to also trade to the upside before we can now start looking at the possibility of framing more higher prices to the equal high points. So this is what I have to show us. If we are bearish, let's see how volume violates this to the downside. So this is what I have to show us in the dollar index. Let's check out the Euro USD pair, guys. Here in Euro USD, what we can clearly see in the Euro USD pair is the fact that price have traded back into this supply zone the second time. So this was the first mitigation of that supply, and price traded to the downside to this demand, and we have bullishness to the upside. So we have to be open-minded. If we should see bearishness in the dollar index, then we want to continue bullish in the Euro USD. If it happens that we're seeing a clear bullishness in the dollar index, then we should know that in the Euro USD, we want to go bearish. Because right now from the Euro USD, you might be confused on where to expect to see price delivery head towards. Because right now we have that price has returned to a supply zone the second time. So there is the possibility that price may respect the supply and then trade downwards again to the downside. But what we can see is that price here returned to a demand, and now we can see we have this engulfing candle. So we have also that perspective to want to expect bullishness. But anyway, let's check out the daily time frame. So here in the daily time frame in the Euro USD pair, so what we can see is from the supply back to this demand, the daily order block here in confluence to the bullish fair value gap here in the daily time frame, and we had this bullish movement. So what we can see is the fact that price traded to this key level, which is within the weekly supply zone, and volume traded to the downside, failing to close above this key level. Now, what we can see is now the bearish delivery to the downside. Yet in the daily time frame, if we're having a drawn liquidity to the downside, after price has taken this sell side, then it is this fair value gap. So we can see that price here is respecting this key level, which is within the weekly supply zone. So from the narrative we are clearly seeing now, we may see the bearish movement of price to the downside into this bullish fair value gap. But then looking at just the CRT concept, you can see that, yeah, price swept this low, price swept this low, volume all closed above it. So this is telling you that we may see the possibility of bullish movements, but then price is reacting at a supply zone. So we may see the possibility of further bearishness to the downside into this daily bullish fair value gap. Before now, we may see any bullish reaction to the upside, or we may see price further continue downward to the downside. But then let's check the 4-hour time frame. Here in the 4-hour time frame, what you can clearly see is the bearish movement we analyzed 3 weeks ago. From the beginning of it here, we said we want to see bearish movement to the downside, and we can see that clean delivery. Price return to the daily bullish order block in confluence with the fair value gap and gave bullishness to the upside. So you can see from the 4-hour time frame clearly price is respecting this bearish order block, which is the key level we marked from the daily time frame, which is within the weekly supply zone. So you can see we had this form of consolidated price delivery, and then a fall, and then we had this push, an impulsive bearish movement that took out this low. So indirectly here we have a trend line liquidity resting here, and price seeked all of this trend line liquidity into this supply zone here that had this impulsive movement to the downside. We had a break of structure, a pullback here, giving us a liquidity resting here before we had further bearishness to the downside. Price returned to that and is respecting that. You can see that volume is failing to violate this supply zone to close above that. And then we had fall of price to the downside. Price went again to the upside, back into this 4-hour key level, and then price again dropped to the downside, giving us bearish movement to the downside. So clearly now from the 4-hour time frame, price has not really mitigated the volume of this bullish order block. So we may see the possibility that price now may return to the upside and take out this buy side liquidity for us to have bearish movements. So if we are bearish, this is what we have to wait for to see how price seek this buy side liquidity. We have to look out for sell model here. If price gives us a clear sell model in the lower time frame, then we want to go bearish to the downside. First, we want to be targeting to see the volume of this down close candle before the bullish impulse, and in extension then we have the daily bullish fair value gap resting here. So what we can now see is this is the expectation for bearishness. Want to see how price may seek this buy side liquidity to this 4-hour key level before we have the bearish movement of price to the downside. But then if you are bullish, you just want to maintain bullishness, then we really have to wait to see how volume is going to now violate this key level in the 4-hour time frame. If volume should close above this, that is the candle body, then we may begin to see bullish movement of price to the upside. So this is what I have to show you guys in the Euro USD pair. And in case you want to jump into bullish movement, then wait to see how volume will close above this candle body here. And then in lower time frame, you can now look at a bullish reason, first targeting this buy side liquidity first, because from here we may have a reason to go bearish to the downside. And then if you now want to wait for a more clear bullish reason, then you may wait to see how volume trades here, violating this candle body here. If volume should close above this, then we may see price return and then bullish movement to the upside. But I'm looking at the possibility of the bearishness than the bullishness. For price to seek this buy side to this 4-hour key level, and we may have price fall to the downside. First, we have this target, in extension the daily bullish fair value gap here. So this is all for the Euro USD. Here in GBPUSD from the weekly time frame, we can see price reacted from a key level I believe was identified from the monthly time frame, which I pointed out in previous forecasts. And we started having bearish movements. Price seeked a buy side liquidity resting here from the monthly time frame. And also we can see that from the weekly, this high here, and we started having the bearish delivery, and I told us to expect to see price would take out this sell side liquidity. So when price took out the sell side liquidity, we had a return to internal range, which is this bearish fair value gap. Now clearly we can see a rejection, a very sharp rejection to the downside. So from the downside here, we really do not have a key level or sponsorship zone really meant to sponsor strong bullish movement to the upside. Aside from the fact that this is where we have a valid pullback before bullish movement of price to the upside that took out this high point here. So it means in extension, if price is falling to the downside, we are aiming to see price trade lower to this key level we have here in the weekly time frame. Now, price have traded to the bearish fair value gap zone, and we have the rejection to the downside. So, which we may see the possibility of price continuing bearish. So, somehow we have a clear bearish expectation in GBP than in the Euro USD pair. You get it, guys? So, one of this may carry high volume than the other. So let's check the daily time frame. What we can see from the daily time frame now is, from last week, I've been making reference to seeing the possibility of price dropping more lower into this daily bullish fair value gap. And clearly you can see this is the key level mark from the weekly time frame. And here we have this bullish order block. This is really the down close candle that sponsored the bullish movement that took out this high. And if you're drawing a trend line, let's look at that. We have this. So you can see this is a down close candle that really gave us the bullish movement that even took out the trend line. And finally, more bullishness that took out the structural high points here. So it means we want to see the possibility of bearishness to the downside into this zone if we are bearish. So it means the dollar index may give us bullishness next week, but we just have to be open-minded and look at the scenarios I gave to you guys also in the dollar index. So looking at GBPUSD now, we are more bearish than having a bullish narrative, guys. So here in the GBPUSD price returned to this daily open close price, and now we have this bearish movement to the downside. In confluence is an inversion fair value gap here in the daily time frame, which price respected then and gave us bearishness to the downside. This is not really a valid zone to want to consider the possibility of strong bullish movement to the upside. But anyway, it's the markets. Anything can happen in the markets. So I am more bearish in what's the GBP USD. Let's check the 4-hour time frame where we would identify zones we can anticipate a pullback to for bearish continuation if we clearly see that happening. So from the 4-hour time frame, we can see price traded to the upside into this fair value gap here, because this is also a movement to the downside. This is an impulsive bearish movement that took out this low point. That will be more visible when you use your line chart. So that took out this low point. This is liquidity and engineered liquidity resting here, which we can now see price traded in confluence to the bearish fair value gap. Took out that, and then we had bearish movement to the downside. Now from the 4-hour time frame, we have this bullish fair value gap. Price came trying to respect that, but anyway, price violated that to the downside and also violated this bullish order block. So in confluence to this violated bullish order block zone, what we can see, we have a bearish fair value gap. So for our bearish continuation in the GBPUSD, so we may see price trade to the upside into this zone, and then we can frame bearish continuation to the downside in the GBPUSD pair. So price may push higher to the upside here, and then we have bearish continuation. Price may not necessarily have to trade higher into this inversion fair value gap, but anyway, you can just be open-minded to look at that. But I'll be more interested at looking at how price reacts at this bearish fair value gap resting here within this zone of the bullish order block that was violated. And if that gives us a clear sell model, then we want to sell to the downside. So for GBPUSD pair, all I can say is that it's giving us bearish reason than a bullish reason. So this is all I can say about the GBPUSD pair. I don't want to point out something. I just saw something here that I wish I could point out, but I really don't want to give too much information here, which may cause confusion. So let's just work with this, guys. So this is what we have to look out for in GBPUSD. So let's check out the gold pair, guys. This is gold from the weekly time frame. Gold has really been a messed up pair, but From lower time frame, you can also see cool reasons to execute some certain position. But from higher time frame, what you're going to see is a very rough candle delivery. In gold, you can see this has just been a consolidated movement, or you can just call this a choppy price delivery. But anyway, what we can see in gold is that price traded to the upside bullish to this level here, this key level here, and then we have the fall. Price gave us bearish rejection to the downside, seeked all of this buy side liquidity here, this candle high, this high, and now rejection to the downside. So basically now what you can see is the possibility of price now aiming for this sell side liquidity, and in extension we have the sell side liquidity. But what we can see is that gold has been bullish before we had this movement maintaining this choppiness. So we could just see that possibility of misbehavior in the market where gold may just decide to just continue bullish to the external range. But clearly now what we can see is we are having that reason to expect bearishness. Want to see price seek the sell side. In extension, we have the sell side. And on a long-term perspective, if this is gonna really give bearish reason, then the bearishness is to see how price is gonna fall bearish to this unmitigated volume here, this down close candle that sponsored the bullish movement, because this sponsored movement to the bullish fair value gap, and we had this bullish movement to the upside. So for gold now, we'll be looking at that sell side liquidity target, in extension this other sell side liquidity target, except there is another reason in the market. This is what we'll be looking forward to. Let's check the daily time frame. So here in the daily time frame, what we can see is how price traded into this key level from the daily time frame. This took out this buy side liquidity, but anyway, this is the external range buy side liquidity. So we can see how price gave us bullish movements to this level. Volume failed to close above this key level, and now we have rejection to the downside. This particular level is a 4-hour inversion fair value gap, which I expected the possibility of bullishness, and aiming to see price may come retest the open price of this bullish candle before any sense of bearishness. But anyway, it was just a very short bullish reaction. Price did not actually aim more bullish to the upside. So 5 minutes time frame gave a good risk reward ratio setup than if you have waited to want to execute that in maybe the 1-hour time frame. So what we can see now is how price have traded to the downside. So this is that 4-hour inversion fair value gap, which I was expecting to see. It acts as a support to send price higher to this level. But anyway, that was violated to the downside. So you can see clearly that we are having bearish reason based on the delivery we are seeing here. So we have this sell side liquidity as the target, in extension, this sell side liquidity, and this unmitigated key level that we have here. But then, just the way I've told you guys, we have to be open-minded in gold. Gold has been given a very trickish movement. So looking at this now, this is what we have, bearishness to the downside. And you can see that the volume here, the volume of this bearish candle violated the volume of this bearish candle. This is the bearish candle that gave us the movement to the downside, taking out this sell side before this bullish impulse to the upside. Now price have traded back into that, and we can see that price is giving us the tendency to violate that and trade more lower to aim for the sell side, and then in extension we also have this other sell side. So if we are bearish, then we want to see how price may give us a movement here, and first this is the first target, and then in extension this is the other target into this key level. That is the expectation for gold. But then if you see that price gives you a violation and possibly aim higher, then we also have to be very, very careful. Then if price in lower time frame gives us reason of a bullishness, in that lower time frame we want to first then trade up to the upside to this bearish zone here before we can start determining if price may want to go more higher to the upside. So this is my expectation for the gold pair. Let's check that in the 4-hour time frame. So in the 4-hour time frame, you can clearly see that I told us if we have price gives us that bullishness. 3 weeks ago I called out this position. I think 3 weeks ago or 2 weeks ago I called out this 4-hour zone, which should be our zone for expecting bullishness. And I want to trade bullish into this fair value gap zone here. And we can clearly see that was where price traded into, because I saw price from the all-time high. We had this fair value gap where it reacted from and gave bearish movement, and now we saw price returning to that, and then that was the target. And when price came into that, we can see bearish delivery. So you can see this is the 4-hour bearish fair value gap, which price returned, fell, returned the second time, fell, returned, tested that, and finally broke through it when price returned to the 4-hour demand zone, and we had the push of price to the upside. So I was expecting that possibility that price was going to come into it, react and give us bullish movements. And then I was targeting to see price trades into this fair value gap. But then we can just see just a little bullish reaction, but then price violated that and fell to the downside. So clearly now, I'm expecting to see that possibility that we may just have price continue bearish to the downside. And what you can see is the fact that price have returned to the sponsorship block here. So this is the swing low point that sponsored this bullish movement to the upside. So price have returned to that. So we may see that may give us bullish reaction into this fair value gap, in extension this zone, because there is also a fair value gap here. And then we may now see a bearish reason to want to go bearish to the downside. But then if we are then bullish, this is what you'll be looking forward to. If price would then trade higher, we may now see price may retest this and trade more first into this fair value gap. In extension, then if it's further wants to go higher, then we look forward to higher prices. But then this is my expectation. I'm more bearish. I'm looking more to the bearish side in gold than the bullish side. But then just the way I will always tell you guys, you have to really be open-minded in the markets. Let's check the 1-hour time frame in gold to see what possibly is there. So in the 1-hour time frame, clearly this is what we have in the 1 hour. This is that inversion fair value gap zone. You can see price gave a bullish reason to the upside, and if price was supposed to sustain the bullishness, it was supposed to respect this block, and then we have further bullishness. So you see, this was the target I had, wanting to see price take this high out, and then we can now look at the possibility of bearishness to the downside. But anyway, price just gave a short bullish movement and then fell to the downside. When you change that to a line graph, you can see this is a low that was broken. So let's go back to the candlestick. So clearly now, if we are expecting a bearish continuation to the downside, meaning we have our buy side liquidity here, this is liquidity resting here, we have a fair value gap here in confluence to the level that was broken. So for the bearish expectation, we'll be looking at how price we take out this buy side liquidity and look at price giving us in lower time frame sell model to want to continue bearish to the downside in the gold pair. So it means that if price gives us bullishness, failing to respect this fair value gap zone, and we're seeing bullish impulse, then we may start seeing price aiming for buy sides liquidity in the gold pair. So cheers guys, God bless you all.